Parvat Srinivas Reddy, Managing Director, MTAR Technologies Limited, joining in on the conversation this morning. Mr. Reddy, thank you so much for your time to speak with us. First, I'm going to get your take on the current situation. And as much as you can tell us, because I know this is a sensitive sector right now, so keeping that in mind, what do you think are the opportunities here for Indian defense companies? How is India looking in its defense capabilities right now?
See, look, the opportunities are immense. It's only about how you develop the technologies over a period of time, what kind of collaborations do you have to fast track certain technologies. We have been in this sector for many years. Most important thing is how we can uh, fast track the whole technology related issues to build our defense portfolio over the years. So that's the key to this whole situation right now. And I think we are moving in that direction with the support of Government of India and various other organizations. So I think it's a matter of time that over the next couple of years, we'll be right up there in terms of what we want to achieve in terms of the various goals that we set for ourselves overall for the country as such, in terms of what we should do and how we need to take this forward.
You also have tie-ups in business with major Israeli defense companies, if I'm not mistaken, 3 of them. Has there been an increase in requirements in the last few days, looking at the geopolitical situation? Anything that you can share there?
No, we have enough of a strong order book, and orders are flowing in from that direction as well. But last 2-3 days, nothing much will happen, right, because of the war, and they'll still be working on other issues. But yes, I mean, the requirements are coming in. It will continue to happen in a bigger way. And we have been working with all these leading companies in the past, and we continue to work with them. And we have established ourselves in terms of quality and deliverables with all these companies. So let's hope that things will improve further.
Mr. Reddy, just want to get a sense on execution and what the timelines are looking like. If you're talking about your order book as of the end of December at about 2,400 crore rupees, what is the outlook on how much of that gets executed heading into the end of FY27? And what is the run rate that you've been establishing and expect to continue in terms of order acquisition heading into FY27?
See, we are expecting, I don't want to comment on the next year order inflow, but we will be getting strong orders moving forward as well, the way things are going right now. You must have seen in the last quarter and even in the current quarter, we have received substantial orders. The execution, basically I've said, some are long-term cycle orders and some are short-term cycle orders which have to be executed within 1 year. So when I said that we are looking at a revenue guidance of 50% increase for the next year, that itself is an indication that a lot of orders are going to get executed within the 1 year span itself, and the rest will move on to the second and third year.
Mr. Reddy, I'm not asking for specifics, but we've seen in the past that geopolitical tensions and warlike situations and wars in particular have resulted in fast tracking of certain orders in certain situations. So I'm wondering whether that is something that you anticipate will happen, particularly because so much of your book is export facing.
Yeah, it should happen. It will happen for sure. Obviously, the requirements will go up. They fast track a lot of such requirements during this period, the way things are going right now. It's pretty unfortunate, but that's what it is. So I think, yeah, that's an added advantage that we'll have in terms of a lot of orders getting fast-tracked and volumes also going up based on the requirements of the customers.
Mr. Reddy, you framed FY26 as the highest ever order inflows, but particularly because of clean energy fuel cells and civil nuclear. Now the defense element gets added. Would you believe Q4 itself could be higher than the 700-800 crore implied that was believed to be at the end of Q3 after your con call?
Yeah, I mean, can you repeat your question, please?
What I'm saying is, for FY26, when you laid emphasis on your order book, it was for civil nuclear as well as clean energy fuel cells. Now that the defense order flows would likely be stronger because of all that's happening around, would you believe that your Q4 order inflow, which analysts pegged at 700 to 800 crores, could actually be higher?
I wouldn't say that. It won't be high because things won't happen overnight, in spite of anything happening, external factors. But moving forward, probably those orders can kick in because we're hardly looking at another 3 weeks from today. So it doesn't happen in just 2, 3 weeks. But a lot of discussions are on the anvil right now. And hopefully that things will move the beginning of the next quarter as far as the additional orders are concerned. I don't think there'll be an impact of getting additional orders by end of the year.
The other piece, Mr. Reddy, very quickly, Scott Bessent has said that apparently that 15% tariff comes into play today. Do you get impacted in any fashion because of this 15% tariff, or now it's equal for everybody and therefore no particular advantages or disadvantages?
I think the tariffs was not an issue at all. I mean, it's not about
Okay.
the percentages because we're not, I've mentioned this earlier as well.
Okay, so not an issue for you at all. Fair call. Okay, Mr. Reddy, we wish you all the best for the times ahead, and hopefully at the end of Q4, you might be in a better position to talk about what happens to order flows in FY27 as well. Thank you so much for taking the time out and being with us.